Perfect. Here we are in the 1 hour, and we can see what you want to do on Sunday night is you want to look at your chart and you want to look and see if anything's been inverted before the market starts. Let's go back a little bit before the week starts. So here we have this fair value gap right here that was bearish, and you can see the market came up and inverted it right here on Thursday. So then what it usually does is it pulls back to a PD array or to another fair value gap below or into the fair value gap itself. Here it pulls back to this order block, PD array. And the point I'm trying to make here is that it will always come, well, not always, but come up and then take the high out, the immediate high after the inversion, which is here. And you can see it does it right here. So this gives you a narrative. It gives you an idea of where the market is going. Gives you tidbits of information. Second one, we can see that we have a bullish gap, which is right here, okay? So the market before the open right here came down and inverted it right here. What does that tell you? Is that the market's going to take the immediate low as soon as it inverts it. The immediate low below this fair value gap right here is right here. And you can see the market's come down and taken it. Right before the open on Monday to start your week. So now that we've taken out these lows right here, the market wants to go up more likely. So we have the market go up here, creating a bullish gap. We have no inversions to the left on the 1 hour, except for a little one right here, if you could see it. So then it does come up right here. It inverts this bearish gap right here. As soon as it inverts it, it takes the high out of right here. Slightly pulls back into the gap, as you can see on this candle. So always, after inversion, always expect it to return to either the gap itself or PD array below it. So in this case, it could have came down into this bullish gap right here. So all we're doing here is we're just adding pieces to the puzzle, okay? So up here, we have this major bullish gap right here after the open. It closes it. We have this run. By the way, these blue blocks here are Asia, and the US Open is in the white here. New York Stock Exchange Open right here in the white. Okay, so we've come up. We've made all-time highs for the week, right? Early in the week. So what does that tell you? That we probably want to go down for the week to the weekly 50%, but we won't talk about that quite yet. You can see that we invert this bullish gap right here. Right on this candle. So that means that it's most likely to take the immediate low out of the range. And the immediate low would be these lows down here, not necessarily this low. That gap here will be this low later. So we have a small gap inverted. You just go to the first immediate break, which is right here or right here, and it takes it out right there. If you got into this trade somewhere up in here, you know now to bring it down to these lows. So you have a nice 236 pip run. So then we've come down into here. We haven't inverted this bullish gap right in here yet. Here we have this bullish in blue here. Market comes down, respects it. What do we do on this bearish gap? We're stuck between two. We filled it right here. But the moral of this story right here, okay, is that there's actually a 4-hour bearish gap, which we use both time frames to confirm right here that it doesn't invert. So we'll go and look at that in a bit. So it looks like it disrespects the 1 hour, but it's actually just respecting the 4 hour. This is a great strategy to use on the 1 hour and 4 hour. And it's just really good for bias. We still need a session clear of liquidity and all that. I'm not switching things up on you. It just tells you where the market is most likely to go with your bias. So it respects the 4 hour here. You can see on this candle right here, which happens and closes right at 8 o'clock candle, inverts this bullish gap right here, right? So the next low after this bullish gap, your target would be this low down here. Market comes down and takes it. So if you got into this trade, a short position after it filled it, or you're still holding it up here to see if it was going to fill the gap, but here you can see price return into a gap right into this bearish gap, right? Here's your entry on a low time frame and target the low, 192 points. Better yet, we come down. So here we are sitting on Friday, and on the 1 hour, we've inverted this bearish gap right here. right? So we can expect a pullback to PD array below it, the 50% mark of this bullish gap, right in here to here. And we can expect, where would the high be? The next immediate high after this bearish gap is this high up in here. So we can take a trade this way, 300 points. Now, we need to match these things with our bias. We need to match these things with session clears of liquidity. Let's just look at this right here so we're clear about how it filled this 1 hour gap, okay? And it filled it on this candle right here. Moving to the 4 hour, what you can see on the 4 hour here is this is the 1 hour bearish gap right here that it filled on that red arrow. Here's the actual 4 hour bearish gap. So it did not fill it at all with the body of the candle. We always use the body of the candle. We do not use the wicks. The wicks do the damage. The body of the candle stays seated at the 50% mark. And then if you wanted to go throughout the week, you can see we have this. We just spoke about this. This was the 1 hour. It also inverted for more confirmation. This bearish gap right here, it inverted this 4 hour gap exactly right here. So we can expect the high to be this high right here. We can expect it to come to this high right here. So here we have the whole week. We go the 1 hour to the 4 hour. We confirm our bias. We confirm our session clear of liquidity. At the start of the week here, we've inverted this gap here. Price return to the low of this low right here. We've come down. I circled this right here for you to this bullish gap as such right in here. Respected it. We have a trade. You can see we just respected it. This is what we have to pay attention to. So we always want to elongate the candles quite a bit like this. You can see we respected it with this candle right here. You can see institutional money has come down into this fair value and traded the bodies in the candle this time right here. We swept this weekly low. This is where smart money buys. This is the discount range here. Smart money buys in the discount and sells above it in the premium. All right, so I hope that makes sense, guys. I want you to pay attention to that every week, and that's going to really help you understand which direction the market is going to head into, and this is just going to secure massive gains, okay? So keep paying attention to this, and if you have any questions, please put it in the comments. Have a good day.